Good morning, everybody. I think we'll make a start. We have 7 people that have come. There may be some more joining us, but I think we'll just make a start this morning. Thank you for coming to this sort of post Brexit catch up on what you need to do when you're importing from the EU. I'd like to introduce Adam Lloyd, who's our regional VAT expert and obviously been very busy with the whole Brexit thing since Christmas. And I'm sure Adam will be able to talk us through various slides that he's got for his presentation. So if I hand you over to Adam now.
Thank you very much, Sally, and thank you everyone for tuning in, as it were, to this webinar. As you know, the UK left the EU on the 31st of December, and about a week beforehand, a Brexit deal was put together, which we all thought was going to be good news, and indeed it is good news. However, what it doesn't do is address a lot of the issues, and I think what a lot of people have found since then is that there's an awful lot of devil in the detail and paperwork and declarations to be made, notwithstanding the fact we have a Brexit deal. The first thing to bear in mind is that before Brexit, the UK was part of the European Customs Union, in effect, the single market. The Brexit deal that we struck on the 24th of December does not keep the UK in the Customs Union. It's a free trade agreement which reduces customs duties to nil for goods that originated in the UK or the EU. In other words, it allows tariff-free movement of goods which have been produced in either of the territories. What the agreement does not do is remove the requirement to file export and import declarations in the country concerned. So declarations via our own import and export systems, CHIEF and CDS, are now required, and proof of exports it must be retained. From a VAT perspective, UK VAT legislation is no longer governed by the EU VAT directive. For example, the UK can now set its own rates, decide what is and is not subject to reduced rates, and that includes the zero rate. And this was quickly demonstrated by the UK on the 1st of January when it moved to abolish VAT on women's sanitary products. So since the 1st of January, and indeed in preparation for the 1st of January, some of the biggest issues we found our clients facing are proof of origin, proof of export, import requirements, the Inco Terms, and goods in transit. And what we'll be doing is going through each of these in some detail today. But in brief, the proof of origin rules are now very important because, as mentioned above, in order to benefit from the zero tariffs, goods must be shown and demonstrated to have been produced wholly or predominantly in the UK or the EU. If you cannot demonstrate that, then normal duty rates apply, and the Brexit deal is of no use. Proof of export. All goods leaving the UK now need declarations completed, and proof must be retained that they have left the country. Import requirements. All goods coming into the UK must now be cleared through customs with the relevant declarations made and, subject to the proof of origin rules, duties paid. There is now a simplified system for VAT accounting called postponement VAT accounting, which we will go on to in detail a bit later. One thing that has come to the fore is Inco Terms. Inco Terms dictate when goods are in transit, which party is responsible for clearing the goods into a country and which party is responsible for exporting goods from a country. And what we have found in a number of instances where the Inco Terms have been undesirable is that this has led to, for example, a UK company having to register for VAT in a European country, even though they're just exporting goods to that country. And finally, which is a sort of a conglomeration of the above, goods in transit. We've had a number of examples where, for example, people are moving goods from France to the UK to Ireland, because that's the geographical normal way to do it, and that's the way that they've always done it before Brexit. But what that is resulting is in an export, in that example, an export from France, an import into the UK, an export from the UK, and an import into Ireland. And each one of those needs to be treated as a movement of goods, as described above. So I'll be going into those in a lot more detail over the course of the next 25 minutes or so. Okay, we'll start with the rules of origin. This is a specific rule that came out of the Brexit deal, and only goods which are produced in either the UK or the EU are allowed to be moved between the two free of duties. There are no, where there's no processing, the rules are clear. Goods are either produced in the EU or the UK, or they're not. However, where UK or EU goods components are imported into the UK and used in a manufacturing process, the extent to which those parts make up the final value of the finished goods can determine whether it qualifies under the origin rules. The way this calculation is carried out and the allowable percentage is determined depends on a number of factors, including the commodity codes, the source of the parts, and the existence or otherwise of a free trade agreement between the countries of origin and the UK or the EU. For example, if goods are coming in from China and the UK or the EU does not have a trade agreement with China, then those goods will be treated as non-origin. Whereas if there is a trade agreement with the country, that will affect things. Product-specific rules of origin will, however, need to apply. In the same manner, the UK has not adopted all of the EU free trade agreements, and several of those are still in negotiation or not in full effect. Companies will therefore need to stay on top of any developments and related to customs and international trade. As far as exporters are concerned, exporters meeting the rule of origin will need to obtain a preference certificate to ensure that the importer does not have to apply tariffs when bringing the goods into their country. So the rules of origin are very important in that without proof of origin, normal duty rates will apply on trade between the UK and the EU. And the way you would calculate that origin is dependent on a number of very complicated factors. Okay, moving on to exports from the EU, exports of goods to the EU, sorry. Post 1 January, there's no longer a differentiation between sales to businesses and private customers from an EU perspective. This is sales of goods. All movements are treated as exports, and therefore proof of export is needed and is paramount in not having to pay VAT. Proof of export can be commercial, or it can be official export documentation by a chief or CDS. But what it must show is details of the supplier or the exporter, the consignor, if you're using a freight forwarder, the customer, if you're the person to whom you are obviously moving the goods, the nature of the goods, an accurate value, the export destination, and the mode of transport. All of these things need to be detailed on export documentation in order to demonstrate to HMRC in the event of an audit that the goods have actually left the country and therefore do not need to have VAT charged on them. If you don't have those proofs, then HMRC will require you to account for VAT. Flipping over to imports of goods, we mentioned postponed accounting before, and this is a simplification for reporting VAT on imports. From January 2021, importers can use postponed accounting, which is a simplified system for all imports into the UK. Under the system, the importer can account for import VAT on the VAT return rather than importation, and similar to the previous acquisition VAT process that applied to movements of goods coming in from the EU. It covers postponed VAT accounting covers all goods imported for business use, whether from the EU or from outside the EU, and there is no need to ask permission to use it. Instead, what importers need to do is select on the import documentation that they will be accounting for import VAT on their VAT return, and include certain extra information on the import certification. Once it's in place, importers will be able to download monthly statements via the government gateway, and transpose the figures onto their VAT return each month or each quarter. The VAT is declared in box 1 and claimed on box 4 on the VAT returns, subject to the normal rules, so the net result should usually be 0. As with exports, the responsibility for making the appropriate declarations will rest with the person who is responsible for importing the goods, and this is dictated by the Inco Terms, which we'll come on to later. And finally, for bringing goods into the EU, intrastat declarations are still required during 2021, providing you're importing over the registrable limit, which is 1.5 million per annum. Okay, the next thing to bear in mind is the Inco terms. Now, these are usually the terms of trade or the terms of movement of goods between a buyer and a seller, or more importantly here, an importer and an exporter. Inco terms apply to all cross-border movements of goods, and they set out the responsibility of each party while the goods are in transit. In particular, they dictate at what point the goods are no longer the responsibility of the sender and become the responsibility of the recipient. Now, this is important because it is the person that is responsible for the goods when they are cleared into the destination country, or the importer of record, that must make all the import declarations and pay any VAT or duties due. And what we've had in a few instances is where Inco terms have led to a VAT registration liability for a UK exporter. If the seller is responsible for completing the declarations and paying the import VAT in say France, and this will happen if the Inco terms are called, for example, delivered duty paid or DDP, then the seller has a VAT registration liability in France and must register, make all the declarations, and then make a domestic sale in France to the customer. As you can imagine, that causes quite a lot of issues and problems for the exporters. So the Inco terms are very important. Then coming on to goods in transit, which as I mentioned before is a conglomeration of the issues we've highlighted above. With the UK no longer being part of the EU, businesses bringing goods into the UK and then distributing those goods to Europe are facing reporting requirements on both stages. Import declarations need to be made when bringing the goods into the UK with the appropriate VAT and duties paid. Then export declarations need to be made with proof of export retained when sending the goods off to the EU. Proof of origin is required for both the import and the export side of the transactions, and the Inco terms again dictate who is responsible for what. As mentioned before, we've had issues. We had real issues with businesses sending goods from France to the UK and then to Ireland. And as mentioned before, this basically causes 4 lots of import and export declarations, duties payable, and VAT payable to be required on the parties concerned. And so that can give real problems. And further problems can arise when goods, for example, go directly from France to Ireland with the invoicing via the UK. Because with the UK no longer being in the EU, triangulation can no longer apply. And so such a structure will definitely give the UK company a VAT registration liability in one or other of those countries. I'm going to touch briefly on services. Now, services weren't that badly affected by Brexit because they're essentially invisible. They go cross-border. But there is still a distinction between business-to-business services and business-to-customer services, which we will touch on now. Starting with business-to-business, there's limited changes here. UK businesses must still obtain evidence of the non-UK customer's business status. A valid VAT or tax ID number is sufficient, but other proof is satisfactory. The advice we're giving to people at the moment is to, if they're invoicing EU business customers and putting their EU VAT number on, as was the requirement before 31st of December, just carry on doing that, and that will be sufficient. the other thing to bear in mind, and I've put it third here, but for business to business movements of goods now, movements of services now, there's no longer a requirement to file EC sales lists. Business to customer, B2C, these haven't changed as a result of Brexit. The UK supplier remains liable to charge VAT on sales to private individuals in the EU. That was the case before 31st of December and remains the case now. Okay, but just touch on some other changes, other issues that have been affected by Brexit and the Brexit deal, or have been rendered obsolete by Brexit. I'll just run briefly through these for you. Distance selling. UK e-commerce sellers can no longer use distance selling arrangements for goods for sales of goods to EU customers. Such sales are now treated as exports and are subject to the same rules as other exports, as we highlighted above. So export documentation needs to be filed and proof of export needs to be retained. There is no longer a low value consignment relief for imports below £15 into the UK. Instead, for goods at £135 or below, sellers or the postal service have to declare and pay any VAT and duties to HMRC via a new quarterly filing. And some of you may have seen in the newspapers examples of the post office or the postman coming up with a parcel to someone's front door and saying, here's the parcel, and by the way, you owe us £8. And that is for the duty and VAT that they've paid on behalf of, they've paid on clearing the goods into the UK. UK sellers of digital services to EU customers can no longer use the mini one-stop shop, or MOS. That is a facility available to EU VAT registered businesses only. So instead, UK sellers that want to carry on using it will have to get a VAT registration in the EU in order to continue to file their returns via MOS. Otherwise, they have to register in each of the countries in which they are selling their services, selling their digital services. Overseas VAT reclaims are now much more not complicated, but much more burdensome. If, for example, a UK business incurred German VAT, went on a visit to Germany, on a business trip to Germany, they could file a claim for that German VAT on their government gateway account, which would be submitted via the UK government and repaid. Now we're no longer in the EU, we have to file paper returns under what's called the 830 directive, and these need to be submitted directly to each of the European member states in which the VAT has been incurred, and unfortunately can take 6 to 18 months to be repaid. Northern Ireland, this was one of the major sticking points in Brexit negotiations in the first place. The major issue being the political will, the obvious political will to keep the border between the Republic of Ireland and Northern Ireland open, whilst recognising that from an EU perspective, one was an EU member state and the other one isn't. So there are now special VAT and customs relationship between Northern Ireland and the EU. Whilst Northern Ireland remains within the UK VAT area, it still tracks EU rules, including zero rating for VAT and intra-community supplies across the Irish border. EU VAT and imports into Ireland and Northern Ireland are collected by the UK authorities, but in order to trade in Northern Ireland now, you need a special type of VAT and a EORI number starting with XI, which you need to apply to HMRC for permission to use. And just to mop up on a few other things, there's no change to the VAT treatment of services relating to land and property, hire of means of transport, restaurants and catering, transport and intermediary services. So all of those things remain as they were prior to 1st of January this year. So in conclusion, ladies and gentlemen, yeah, we're here to help. Businesses moving goods cross-border should be reviewing your relationship with suppliers, agents and customers in order to establish the extent to which the new rules affect you. If you're exporting, you need to ensure the proper documentation is completed and retained. If you're importing, you need to ensure the declarations are being made swiftly in order to avoid delays. of clearing the goods into the country, or also paying the duties and the VAT if applicable. And on that note, the importance of Inco terms and the proof of origin rules cannot be stressed strongly enough. One of the major issues we've had with our clients so far has been centered around those two issues. We've been working with numerous clients addressing these issues across the board, cross-border issues, and we've developed a good expertise and level of experience in the practical ways to solve the problems that you're facing. So the motto is, be prepared, and we're here to help you be prepared. So thank you for that. I know that was quite a high-level run-through to what is a very complicated situation. The Brexit deal itself was something like 480 pages long. So what I would like to do now is ask if anyone has any questions that I can either field live or come back to you afterwards. Hopefully, I'll be able to field them live. So,
thank you,
any
Adam.
questions, please?
Thank you, Adam. That was very helpful. There's been a couple of questions that have been posed while we've been talking. So perhaps if I look at those first. So one of the questions is about this proof of export. Would a sales invoice with all the details that you've mentioned qualify as proof of export?
A sales invoice by itself for goods, no, it would not. A sales document could in theory include all the issues that we've discussed, i.e. the supplier, the consignor, the customer, and all the other details, the goods, the value, the export destination, the mode of transport. But for belt and braces, I would want to see other documentation other than that. It doesn't have to be massively complicated. It can be the freight forwarder's invoice for moving the goods. It can be the certificate of clearance of goods into the other country. There are simplified declarations as well, which can be filed via Chief and CDS. So if you're moving goods outside the UK, you're going to have to make these extra declarations anyway. Just keep copies of them.
So it's about having that third-party proof that it actually left the country, isn't it?
Yeah, basically, yeah. What they don't want people doing essentially is selling goods in the UK and not accounting for that in it.
And just pretending that they went abroad, right?
That's right, yeah.
Okay. And do the import-export declarations need to be disclosed each time wagons come in or leave the UK at ports? How is it actually handled at the ports then?
Well, most people are handling the declarations on an import by basis. I think in the first 6 months there is a softly approach the customs authorities are applying to these things, and that it is possible in some instances to do bulk declarations. But on the whole, declarations need to be made on each import and each export of goods. Okay.
I'm thinking the Inco terms that you've mentioned is really important. If you're just importing a one-off transaction, like you want to bring in, say you've bought a piece of plant from somebody in Germany, a digger or something. You really want to make sure that the person selling it is dealing with everything to do with their export side, don't you? And you only take responsibility for that item once it's in the UK. Is that correct?
Absolutely. I mean, we've had some bigger companies have been very alive to this, and there's a certain online seller who I probably shouldn't mention, but let's call them Amazon, shall we? And they have insisted that all their UK sellers deliver to them on DDP Inco terms, which means that those sellers are having to register in Spain or Italy or wherever in order to send the goods to Amazon for onward sell to their customers. Now you'd have thought, Amazon. Now you'd have thought that Amazon would have been sufficiently equipped to import the goods into those countries themselves, but they, for want of a better phrase, don't seem to want the hassle, and so they're insisting on DDP Inco terms. So, yeah, the Inco terms are massively important, Sally. They can give a UK company a liability to register in the EU. They can give an EU exporter a liability to register in the UK. And the sensible thing is that that Inco terms that mean the seller relinquishes responsibility when it leaves the seller's country, and the buyer takes on responsibility when it comes into the buyer's country, is the obvious way of moving forward, because that's a common sense thing. But if you have, for example, a scenario I touched on before, where, for example, a UK company has goods sold from France to Northern Ireland, to the Republic of Ireland, and just the invoice comes via the UK company, then if you think about it, that UK company is taking possession of goods in the EU and then selling those goods in the EU. So that company has a VAT registration liability in the EU. It has to register somewhere, in that instance, France or Ireland. And then the Inco Terms will dictate who does what at each end of that. So it's, it is important. The Inco Terms are very important, but they're part of a much bigger picture as well.
It seems to me that there's a whole potential issue there with people just not realising that that's what their responsibilities are.
Yeah. Yeah. I mean, we had an example with, just coming back to the French to Ireland one before, they're selling, they're shipping goods to Ireland. They're invoicing a customer that has no VAT registration or presence in the EU, therefore they charge French VAT.
Mm.
And, the customer was stuck with that French VAT.
Right.
And as mentioned before, you can't claim EU VAT back anymore via the government gateway. You have to go to this paper form, which can take up to 18 months.
Yeah.
So it's about,
it seems like there's a lot of stuff that's going to come out of the woodwork as time goes on that perhaps people aren't aware of right now.
Absolutely. It's about the raw fact that the UK is no longer part of the EU, but we're still trading within the EU. Many businesses are still trading within the EU, and in order to do so, most of them are going to need some sort of EU VAT presence. Now there are ways that can be achieved simply. There are ways it can be achieved which aren't so simple, but it is going to be required, with numerous customers incurring French, German, Italian VAT on goods they used to just ship directly from their supplier to their customer in another EU member state. But they're not in the EU, but the UK isn't in the EU anymore, so you can't use what was called the triangulation process to simplify the goods. The UK company is buying goods in Europe, it's selling goods in Europe, it's got to have a European VAT registration. Right.
And I mean, I've got clients that bring in goods from China and then sell them to Germany. And if the supply is direct from China to Germany, but they've still got to, but it's a UK registered company, I assume they still got to register as having received them into the UK and then ship them to Germany.
Almost certainly, yes. But if the goods go directly to Germany, then they might well have a German VAT registration requirement.
Right. So
because they can't clear the goods into Germany without one.
Right. So for small businesses that only do a little bit here and there, surely this is going to be quite onerous and mistakes going to be made. How lenient are customs going to be?
There is a softly approach, both on the European and the UK side for the first 6 months. That's mainly around the declarations, the import and the export declarations that need to be made. There are simplified procedures for those. In terms of registration in different countries, I think that's a hard fact now, and that's not necessarily being enforced by the fiscal authorities. That's being enforced by the businesses, who are saying, well, we're selling you goods. The goods are in Germany. We're releasing them here in Germany. Do you have a VAT registration in the EU? No. Right, we're charging German VAT.
Right. Yeah.
So it's sort of matter of fact, really, that these things are happening, and it's those sort of issues that businesses are now facing. That without a presence in Europe, it's very difficult to trade in Europe.
Right. So, and going back to your point about Amazon, that seems grossly unfair of them to do that and to push that responsibility onto their suppliers. But I mean, obviously they can dictate their terms, so that's what they're doing. But that's a whole level of responsibility that perhaps quite a few small businesses deal through that platform, don't they?
Absolutely, yeah. And with that example, it did surprise me because they've easily got the facilities to cope with this sort of thing. and it may be that business or political pressure will make them change their minds. But I've seen a lot of businesses that are just dealing one-to-one with similar size, small to medium-sized businesses across border, where they've said, well, can you deliver this on these terms, please? And we said, well, no, because that gives us a VAT registration liability in your country. So it's, I hate to say people are trying to pull a fast one, but a lot of businesses don't want the responsibility of clearing the goods into their country, even though they're the importers. And we have had examples. It's been, for all the reasons we've been talking about already, examples where a business has opened a VAT registration in an EU member state simply in order to clear the goods because their customers don't want it. And it's been good. It's been a good customer relations thing, and they've kept their customers happy, as it were. In that particular instance, the fact that they've now got a VAT registration in Ireland means that it facilitates their trade across the EU, because they can treat that VAT registration in Ireland the same way that they use their UK VAT registration prior to Brexit. So there was a double benefit to that one. But that is what's happening. People are trying to use the Inco terms to avoid liabilities in other countries, or indeed liabilities in their own countries.
Yeah. Okay, thank you. The other thing, I suppose, this postponed VAT accounting, can you just go through that again? How do people actually find out what VAT that they have to put on their returns?
Okay, no problem. Well, postponed VAT accounting is not a legal requirement, it's an option, first of all. So if you wanted, you could clear your goods into the UK. You would pay the VAT and any duties on importation via your customs agent or whoever. That might go on your deferment account, or you might just pay it. And then in 3-4 weeks' time, you get a form known as a C79, which is a form from HMRC saying you've paid this VAT on this importation, you can now claim it. And then you put that on your VAT return, and that's how you claim the VAT back. Now, that's obviously a reasonably onerous system, even though it's been in place for non-EU imports since time immemorial. So what the government thought, and this is, I think, a great move, is they've given you the option to replace that with a system whereby you don't pay the VAT when you import the goods, but you tick a box and fill in a couple of boxes on the import declaration saying you're going to pay it via postponed VAT accounting. And that's all you need to do at that stage. And that way you don't get charged VAT on importation, but what happens then is on your government gateway account, when you come to file your VAT return, there'll be a statement saying you owe this much VAT on imports. So, if you've imported £10,000 worth of goods, you have £2,000 of VAT to pay on imports. You declare that in box 1 as your import VAT payment, and subject to the normal rules, you reclaim that in box 4 as input VAT. So the net result is nil. So it's the same way as we used as before 31st of December. You would account for VAT on acquisitions from other EU member states. But instead of putting it in box 2 in your VAT return, you put it in box 1.
So how will the revenue know that whether you've accounted for it or not? They won't.
Normal VAT audits, but like I say, they'll know how much you owe on imports because they'll see the government the postponed VAT accounting statement on your government gateway account. They put that together. So I think it will be subject to them coming out and doing a normal audit of your books. For nine out of 10 businesses, it will be in and out, so the net result will be nil. It'll only be partly exempt businesses or non-businesses like charities that might be moving goods who can't reclaim the VAT that they incur, that have to pay it in box 1, but then can't put any or all of it in box 4.
Yeah. Okay. And can you just the services as well? Sorry, can you just revisit that again? So if they're obviously services to customers, you would add UK VAT, but business to business, did you just say that hasn't changed very much?
Essentially, it hasn't changed. The burden of proof is, if anything, relaxed slightly, Sally. So if you're providing services to businesses in the EU or indeed outside the EU, then you need proof in order to not charge UK VAT. You know, to be able to prove that that customer is a business. Now, that could be certificate of incorporation, a tax ID number, any one of those things would usually suffice. However, what I'm saying to people who are trading with the EU is that up to now, in order to demonstrate that it was a business-to-business transaction, you would have been required to put the customer's VAT number on your invoice. My advice is carry on doing that, and that will be more than sufficient.
Good. Okay. I don't think we've had any other questions. One thing that that I probably will follow up with everybody that's attended today is the new grants that are available. I believe it's up to £2,000 that are grants that are available for people that need extra training or professional advice on how to deal with this.
Absolutely.
Yeah, is that something that's available now?
Well, the application portal hasn't opened yet. I think it's going to open in the next 2 weeks. But obviously, but yes, I mean, it's £2,000 to get training on doing import declarations, doing export declarations, doing your proof of origin calculations, all those sorts of things. There's money available from the government in order to get training on those. But obviously, as soon as that portal is open, I will circulate it to everybody, and they can make their applications. In the meantime, before, during, and after that, we're of course available to help with any difficulties that clients are experiencing.
Yeah. Okay. Well, I think we'll end it there then, and say that anybody that wants to get in touch, if you want to give the office a ring, me a ring, in the first instance, I can get Adam to call you back with perhaps more detailed explanations, or Adam's number is there. You can phone Adam direct, and just go through any specific points that you may have.
Yeah, please do. Yeah. Thanks, Sally. As I said, my number and my email address is there, so please feel to contact either Sally or Vince or myself directly, or any of the team in Oakhampton and Launceston, or myself, and we can run through whatever specific issues you have. Lovely.
Okay. Well, thank you, Adam, and thank you everyone for attending on this rather wet grey morning. Hope that's all been useful for you. Thank you.
Thank you very much, everyone.